All right, Jonathan, let's do a thing.
Let's
Welcome,
do it.
welcome, everybody. This is Acquisitional Wealth episode, whatever it happens to be. We are so glad that you are here with us today because today is going to be a very interesting show. We are going to be addressing the changes in the SBA small business loans, particularly when it comes to growth, expansion, and acquisition. And joining us today, I have one of the crew members over here at Kingsbridge with me, Jonathan Malthouse. He seems to be our resident expert on all things SBA. Jonathan, welcome to the program today. How you doing, sir?
Thank you. Thank you. I'm doing well.
We've known each other for, I don't know, 8 years. This is the first time you've ever made it on the show. We need to change that, man.
Yeah, no, it's been a minute.
Okay, so let's just jump right into it because I know that's what people are wanting. And with short attention spans, they're like, come on, just get to the point. So, the SBA has changed its rules. It is freaking a lot of people out. Before we get into the details and the minutia, why would people be freaking out? Just 30,000 foot view. What's happened?
What's happened is you had a big shift following COVID of a lot of people discovering the ability to purchase a business through the SBA and through SBA loans. And unfortunately, the SBA responded by making it a lot easier for people to get loans who shouldn't get loans, and it just kind of ruined a good thing to some extent. And what we're seeing now is a pushback from the SBA to go to pre-COVID rules of underwriting, of scrutiny, and it's making a lot of people nervous.
So yeah, it is. And just for context, I want to kind of throw in there because I wrote the book Acquisitional Wealth. This is exactly why the SBA would ease the rules a little bit. It's because at the end of the day, we need small businesses to survive, at least at the moment. Once AI and robotics gets here, that's a whole nother story for another episode. But right now, small businesses are still the major employer in the US, and needing to have those businesses change hands is important. So, you and I talked about something interesting about, not only did the SBA make these changes, but the failure rate of SBA loans.
Yeah,
That's changed too, yeah?
yeah. Pre-COVID, SBA loans strictly for acquisition loans, because the SBA does a lot of different loan programs, but
Yeah.
strictly for acquisition loans was at 1.3%.
1.3%.
Yeah.
And when I wrote the book, I rounded up just because, how people are. I rounded up to 2%, but 1.3% failure rate on acquisitions. And before you give us the new number, the reason why that failure rate was so low is because when you were doing this correctly and doing it with a broker and everything you're supposed to do, uh, by the time you purchased a business, the owner, the owner's attorney, the owner's broker, the owner's lawyer, the owner's CPA, your broker, your attorney, your CPA, the SBA, the bank issuing the loan, the third party valuation company that they hired to validate, 11 people sift through the information to make sure the deal is sound and good. And because of that, we had a 1.3% failure rate, which is something that is one of the reasons I love the industry so much. Now, with that being said, since COVID, we saw the rise of a lot of gurus. I know there's one or two idiot lawyers who decided to coach people on how to buy businesses, sometimes with no money down, and they charge a lot of money for the classes. I know there's other people who, again, charge money for classes and they don't represent you at all. They just charge money for the class because nothing's more irresponsible than being a guru. Um, I have a little bit of a personal angst against the guru types, if you can't tell. So once the gurus, all of the experts charging for mentorship and membership programs, once they got into the industry, Jonathan, what did the failure rate jump up to? Probably what, 1.9% or 2.1%?
13.5.
13.5. So for those of you living in Rio Linda, that's an over 1,000% increase in failure rates. Not 100%. 100% increase would have taken us to 2.4 to 2.6. What was it again? Just what was it?
13.5.
Oh, oh, oh. So if you are upset that the SBA is now tightening the reins a little bit, just blame your local influencer who's talking about buying boring businesses and cheap businesses and all the other sort of stuff that they should never be talking about. And to make matters worse, a lot of these gurus then use their audience as a deal funnel for themselves and basically say screw you to all of the other people who really need deals to work in their lives. But what does it matter when you're tossing the trash to the curb if they're making their own money, right? Anyway, so that's a huge increase, man.
Yeah. Yeah, and I think what it really did is it highlighted the struggle that it is to make that transition from employee to owner.
Yeah.
Um, there, it's not that you can't spend 400 grand and purchase a $4 million business, but there's a lot of other elements. And I think what happened is the SBA just wanted to find a way to stick people into businesses,
Yep.
and they did not enough vetting. And honestly, when you don't have a broker, that's that's their job.
Right. Right.
It's the broker's job to make sure that you're going to be a good fit for this business.
Yep. And then, of course, the banks saw it as easy money too, because a lot of people don't know that the SBA is backing these loans 70, 75%. So for a bank, especially a loan officer or a loan broker who gets paid on loans issued, they just want to get the money out the door too. And whatever happens, happens. I mean, some places have chargebacks when a loan fails, the salesperson will lose commission, but it's a numbers sort of game. And whenever you turn business into numbers, the numbers leave the profit pocket. And that's just something people fail to realize. All of these idiots who are like, oh, it's a numbers game, typically lose their numbers. Yep, the numbers that you're dealing with are the profits that are leaving your pocket. Business is much more than numbers, and if you don't understand that, you shouldn't be in it. But that leads to a really interesting point, because there's always going to be some failures, right? We know that. I mean, not every business is going to succeed. Sometimes we see people blow up their own business that they've purchased, which is mind-boggling, but we see it. But let's kind of talk about what these changes are and
Mhm.
how they might impact people. So I know you prepared and you have a list of stuff. So let's
Yeah.
kind of go through some of them. What's the
Sure.
changes?
So I want to talk a little bit first of some of the driving component behind the changes. I've spent the last few years really getting to understand not just one specific bank and its process, but a whole litany of different banks. And they each have their own unique relationships with the SBA. And I get an opportunity to talk to a lot of them. And the thing that continually comes up that the SBA has been leaning toward, and what they switched to with this post COVID leniency, is they'd make concession. Like, for example, before COVID, you could have a seller finance note be contributed to your down payment, but it had to be on standby for the full length of the loan. So that could be 10 years, 25 years, but it had to be, the seller agrees not to get paid until that period has expired. Post COVID, they said, well, just just put it on standby for 2 years. And they could get away with that because they still would push responsibility onto the lender and insist on prudent lending practice. So they started to become much more vague in where the fine lines are, and just push it on to the lender of, well, prudent lending practices need to be observed, and if you're caught not, then there's going to be an issue. Uh, so here's the lines, but the rest of the deal needs to make sense. So you can't necessarily come in at the minimum level on every account. You know, zero money after down payment. maxing out the amount of seller finance, not having uh, any relevant industry experience, and then expect a bank to look at it and say, "This seems prudent. We'll give it an okay." Um, going into now 2025, realizing that they couldn't trust the banks to make good choices as much as they thought they could, they're now having to pull in the reins quite a bit more. Um, so one of the big major shifts is that whole standby period we've talked about.
Yeah.
So going back to a full standby for the length of the loan in order for any sort of seller finance to be counted toward your down payment. On top of that, they're limiting it to only half of your down payment. So it used to be it used to
Interesting.
right. It used to be a minimum of 2.5%. Granted, it was not, I had never seen a bank go down that low, but that was the SBA guideline, was the buyer still had to put in 2.5%. And most banks would only ever go half. But now it's an SBA requirement.
It's interesting too. We have had deals, and one of the benefits of Kingsbridge is we're one of the best business brokers in the country. Certainly, one of the largest non-franchise ones too. And we see a lot of deals, and we have been on calls where when the banks wanted to be lenient and they were trying to create routes around the owner financing thing, the bank would essentially hint at omission. I remember one call where the seller and the buyer were talking about working a side deal to kind of circumvent the standby period. And the
Mhm.
loan, of course, the loan officer gets a commission on the loan. So he's like, you know what, my phone broke up. I didn't hear any of that. And then when they started to repeat it, he goes, nope, nope, wait, my phone, nope, I'm losing reception. And he hangs up basically because, hey, if I don't know,
Right.
you can get around it. But it sounds like they're changing those restrictions, and for good reason. I mean, we're not talking about a 5% increase in loan defaults. We're not talking about a 10% increase in loan defaults. We're not talking about a 100% increase in loan defaults. They have to do something because too many people who should not have been getting the money have been getting the money and then just destroying it. And it destroys it not only for the one who goes default, but it hurts for all of the other good people who are trying to do this right. It hurts them too because now they have to be restricted. So I get why people are hurting with this and are scared of this, but I also understand why it had to be done too. One of the other things that I think is interesting, Jonathan, is this kind of changes some of the international rules too. One of the things I put in the book was citizenship and loans and how buying a business is a great path to citizenship, which it still is. But when it comes to an SBA loan as part of that process, that's changed too.
Yeah, yeah. Before the SBA was much looser. It wasn't exactly as simple as using an SBA loan as a non-citizen to purchase a U.S. company. But there
Okay.
were definitely ways to be a member of a multi-member LLC and only own a certain portion of it, and kind of have your way in that way. Or a lot of people would just come here and buy it in cash, which is still an option. But as far as SBA rule changes go, now uh, you cannot own any amount of an LLC as a non-citizen, and that entity get an SBA loan.
Which is a huge change. That's a huge change because we've worked with people who kind of have used partial ownership as an anchor.
Hmm.
You first start with 10%, and that gives you the ability to have U.S. interest, which gives you the ability to have permanent life insurance, gives you the ability to start making other sort of loans. And then once that's done, creep up to 51%, and now you qualify for the loan also. And so we've seen that as a ladder, underutilized because most gurus don't understand it to teach it, but
Right.
definitely a useful tool for a long time, and that's changed too.
Yep.
What sort of impact? I mean, you are kind of an SBA expert, and folks, when I say that, he really is. I've been on calls where Jonathan has taught the bank how the bank works, and he's found options and loans that the bank didn't even realize existed. So he is really good at this. From your perspective, what do you think this does to the acquisitional industry? How does this play out?
I think it has a short-term loss and a long-term gain because one, there is a need for businesses to transfer,
Yeah,
but we don't want all of those transfers being unsuccessful. That doesn't help anyone. And actually buckling down and making sure that these transactions can happen without hitches and uh, to the next generation of business owners is going to have long-term benefit.
yeah. So obviously, I'm a little, I guess, blunt when it comes to my opinion on the influence that the influencers and the gurus have had on this. But what do you say to that issue? Do you think that had any impact on it, or am I just mad at
Um,
Don
no,
Quixote
I think
taking on windmills here?
no, I think there really is there is a substantial impact that they have had. One of the things that I have heard from multiple banks now, because when this came out about a month ago, none of my banks were reachable, and they all were messaging me back on whatever deal I was working with them on, saying, "Hold on, we're on a really long call with the SBA." It was like a 6-hour call. And one of the things that came out was the leading cause was buyer groups. And as our practice at Kingsbridge is to be extremely cautious when someone says, "Well, hey, I got 100, and these other 5 guys got 100.
Yep.
Let's all pitch in together." Um, that one, there's a couple of things that happen. As soon as the split of equity doesn't leave anybody with any sort of majority ownership, uh, who's who has enough on the line to take responsibility when things go wrong? Who has
Yep.
enough on the line to not just even take responsibility when things go wrong, but just take responsibility on a daily level for daily activity?
Yep.
Everybody owns 12%. How motivated is the dude that's supposed to be in charge?
Yeah, yeah, and to prove that, and I want you to get back to that point, but to prove that's the case, I had an SBA lender tell me point blank that if you don't own a certain percentage, you're not responsible for the loan anyway, Josh. So just create your own group, and I'll just keep underwriting your deals. Well, of course, he loves that because he keeps getting commission. Supposedly, I'm supposed to love that because I have an infinite money glitch, and people who are idiots think, "Oh, infinite money glitch, there it is, there it is," and because they're so stupid when it comes to wealth and investing and legacy and wealth creation and protection, they jump on these stupid bandwagons and it ends up destroying it for everybody. For every one person that makes a lot of money and writes a book about it, there's a bunch of people who end up getting hurt. And, whether it's called a buyer's group or a search fund or whatever it happens to be, yeah, it's just stupidity on a stick in most of these cases, especially when you think in some of these groups, Jonathan, either A, nobody in the group has ever owned a business anyway, or B, there might be one or two people who have owned one or two businesses, which I put in my book. That's anybody can muscle their way to 5 million a year in one business. That doesn't take talent or skill. I mean, that just takes a little bit of, grindage. But to be an actual business person and do two, three, four, five successful businesses, that's a skill set. And those people don't start search funds or buyer networks by posting on Facebook, "Hey, I'm an investor," or Or changing. Oh, there's this one idiot out there. Change your LinkedIn bio to investor, and then message people to say, "Oh, jeepers, criminy!" History will look back and say, "Wow, there were a lot of foolish people." But anyway, can continue what you were saying.
Yeah, no, and I think the unchecked guru market has drastically contributed to this. You have people that are starting private equity funds that didn't know private equity funds existed beforehand. You
Yep.
have these buyer groups that are popping up. And all they did was read a book or took a course,
Or watch
um,
the YouTube video,
or
"How to
watch the.
Start a Private Equity Fund."
Yep.
Oh,
Yep.
dear God.
Uh, so yeah, and there's I, from what I've read, they've done a good job of undoing some of the rules that were in place that allowed people to kind of gamify the system with the $5 million cap. Essentially, what you had
Good.
people doing normally, if you and I bought a $5 million business and you own 50%, I own 50%, and we go to the closing table, we both have to sign personal guarantees to the SBA,
Mm.
and now that 5 million that we're responsible for caps us both out. It's not like we're two people and we get a $10 million cap. But if you own beforehand, if you owned less than 20%, then you didn't have to sign a personal guarantee.
Right.
So you have five people, all four of them own 19%, and one guy owns a little bit extra. And then each one of those five can now do that 5 times with $5 million.
Yep. And that's what some of these idiots were doing. And what's crazy is if you're watching this video and us talking about it the way we are and exposing it as just stupidity on the stick like it is makes you mad, then you are the problem. You are part of the problem. And you get these people again who don't understand wealth creation, or protection, who are going to get upset that the game that they've been playing, that, oh man, this was great. A lot of people could make a lot of money, dude. Because that game is going away, they feel like, their sunshiny day has turned into rain, when in reality what this is doing is creating a wonderful opportunity for people who don't want the easy button, for people who aren't trying to find the shortcut, dude. Money where they want the money, and the money is so important, and hopefully we get Jonathan back there in a second, but oh, there you are. But
Yeah.
there is no shortcut. There is no shortcut. You're gonna pay for it either now or later. So yeah, good point, man.
Yeah. Just a couple of other things.
Yeah,
If
please.
Yeah. One, there's some changes to franchise lending. You They used to have a fairly open view of franchising. Now it has to be a franchise that's specifically registered with the SBA. There's a franchise directory list, and now if you want to be acquire something that has a franchise a part of it, then that's that's now that's now a set list. There could be some advantage. There could be some
Yeah.
advantage, but
Well, part of the and I want you to keep going, so I'm just going to interject. But part of the reason for that is a lot of people were trying to franchise anything, and that too became one of those guru sort of memeable ways to make money. Oh, start a cleaning service, and then in 6 months turn it into a franchise, and sell 20 locations, and now you're rich. I'm so sick of all these people trying to get these get rich quick things going. And yeah, you can get rich quick, but you know what I'm saying? If there's get rich fast, and then there's scam.
right.
And there's so many people who tried to scam the system that they were actually getting rid of the solid ways to get wealthy in a expedient manner. And
Yep.
franchising was definitely one of them. You and I, we've done a lot of events where people have asked, hey, I have a detailing company. Should I franchise it now? Because that's what the gurus are saying. Or I own a cleaning company. Now's the time to franchise. You have 10 clients and you've been doing it for 3 months. Calm down, Sally. But there's just such this hunger for I want wealth that they're not willing to wait a year for it. If it doesn't happen in 8 months, they're disappointed.
Yeah.
When in reality, prior to finding the guru online, they were going to work 40 years for it. That's the part that I don't get. Like, you went from 40 years to a year. Well, that wasn't fast enough, so I want to go with the scam.
Yep. Yep.
Okay, keep going.
Yep. Um, the there was one change that actually helped, just help deals get done when it gets a little messy. The SBA is not requiring tax returns for underwriting. So a lot of times you can
That's
have,
cool.
yeah, you can have in-house financials done by a registered CPA, and they will, the in-house financials will look different from the tax return.
Sure.
And the tax return looks the way it does simply for tax strategy.
Right.
Has no real hindrance on the deal. But uh, as long as you have a certified CPA that will sign off on your profit and loss and balance sheets, those can now be used in lieu of messy tax returns.
Very cool. That's an
Yeah.
improvement because we
Yeah.
know that was a problem because, man,
Yeah.
getting taxes done, the backlogs with the IRS to make changes, and
Yep.
it was a headache.
What a lot of times you see is for the day-to-day running of a business, you want to go off of accrual because that just makes sense of how you're going to run, how you're going to make sure bills are paid, whatnot. But for tax purposes, they file cash basis, which typically on paper looks less profitable.
Right.
Now there's no trying to. I had a deal in order to get it done. I essentially had to, because the bank wasn't going to do it, because it's not their job to figure it out. The seller wasn't going to do it, and the CPA wasn't going to do it. So I had to go and find every dollar between the profit and loss and the tax return to show the bank, look, these are the same thing. Take it.
Yeah.
Let's go off the accrual. Um, so,
Any other changes that you like, or anything else you wanted to make sure we mentioned?
yeah. Going to, I think this has been an impact due to the guru market. Uh, the SBA has done away with an easy partial buyout. So, up until a couple of years ago, there was no such thing as a partial buyout for SBA. You were either buying all of it or none of it.
Yeah.
Um, and then you had issues arising with people wanting to keep the seller on for longer. So, with more people wanting to buy businesses and not having that exact industry knowledge, they would feel more comfortable having the seller stay on for more than a year. And oftentimes the seller was willing to stay on for more than a year.
Yep.
SBA just won't allow it. So they came up with their own workaround and allowed for partial buyouts where the seller retains a portion of equity and it can just be bought out later by the buyer or whatever. But now he can keep the seller on in some capacity. It caused a lot of problems. It also caused a lot of lawsuits.
Yeah.
Uh, and the really the major party that loses when all of that shakes out is the bank. The bank dished out all of this money, and now the two parties are fighting, and they don't get paid. So um, the requirement now is even if a seller is holding on to as little as 1%, they must sign a personal guarantee for the entirety of the loan for a minimum of 2 years.
Oh, that
And
changes things.
you better wait those 2 years before you buy that vacation home.
Uh-huh. Uh-huh. Man, we had one couple, they actually right from the LOI stage, they went into a purchase agreement for their dream mansion, which of course you shouldn't do. Money's not money until you have it. And they ended up kind of losing big time out on that deal, and it was their own fault. But yeah, that's also going to impact how quickly people are going to be willing to sell too, because you had a lot of these idiot gurus out there who are trying to gamify the system, saying, well, just get them to retain a portion, and they're not liable, and da 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 da. And you would almost kind of sell the seller on why your no money down deal was so awesome, or whatever, some sort of lame crap that wouldn't have passed a third grade math class if people were actually thinking. But they were doing it. And now, if the seller has to be personally responsible for the loan too, they're going to make sure that seller's the buyer's the right buyer.
Yeah, yeah,
Nice. Nice. I get that it kind of sucks. It's one of those, ooh, man, that hurts a little, but the
yeah,
industry got better because of it.
yeah, yeah. Just a kind of final thoughts. The world is not static, and business is never static, and everyone has to shift and adjust and pivot.
Yeah.
I think looking at where we've come and where we're headed, the facts are that as an informed buyer needs to be fully aware of the risk, and they need to just because the bank is willing to lend you money doesn't mean you're in the clear necessarily.
Right.
Do your own due diligence, lean on your broker and their due diligence. Um,
Yeah. I can't believe people who don't have brokers, let alone qualified good brokers, because there's a lot of terrible brokers too. And we've seen that. We've seen people who are like, oh man, that must be a great way to make money. Let me go pass my real estate test and become a business broker. And just the death and chaos that those people have created is astronomical.
yeah, yeah,
Let me piggyback on what you just said, though. I think the buyer also has to be ready to be a business owner.
totally.
I think what has happened, and I try not to do this with my book. I put a whole chapter in trying to warn people, but people don't listen to it. You know this because you've had people be like, well, Josh said, yeah, but Josh also said, like, I need a shirt that says Josh also said. You have to be ready for this. You have to be ready for the stress. You have to be ready for the chaos. You have to be ready for the lawsuits, because they are going to come.
Mhm.
You have to be ready for all of the stuff that comes with this. And I think what happens is people see the truth, which buying a business can be a great way to create wealth, and that's all they focus on. And when they're not ready for all of the other stuff that comes with it, they fail. They
Mhm.
fail, and they get disappointed in the whole process. They get disappointed, like, "Oh my gosh, I bought this business and look what happened." When in reality, then maybe something else should have been for you, and they don't kind of weigh the other alternatives. Anything to say on that?
No, I agree, and there is a different kind of stress that you've talked about being a business owner, and it's intense. And having debt over your head makes it more intense. Um, and if you're not ready for it, actually, I was doing out the math the other day. Do you know who our most successful demographic as clients have been?
Go for it. Who are they?
Former military.
Former military. That makes sense.
Yep.
That makes sense.
Yep.
And we've collected a lot of West Pointers too. West Pointers seem to love us.
Yeah.
We need to get more Annapolis grads.
Yeah.
Anyway, but yeah, you're right. Now that I think about it.
Yep. So that's a very real element is ability to handle stress.
Yeah.
It's more than just having the money to write the check.
Yeah, and even if you buy the right size deal too, because I talk about that in the book. You want 5 employees or more, 5 million a year, 5 years old, all that sort of stuff. But even after you do all that, there's no level where the stress doesn't exist. If you're 51% owner, the you're it. Or
Mhm.
if you're the one in charge, you're it. Like
Right.
look at Elon Musk. He owns what, 14% of Tesla, and he's sleeping in the office to get the company back on track. There's no point where you're rich enough, big enough, powerful enough to let go. If you're the one who wants the ball, you're the one who wants the ball. And if you can't handle that, find an alternative. And there are alternatives.
Yeah, and that's I think that's really key. We've talked before about if based on the success rate of acquisition in business, you'd have to throw a grenade into the company in order for it to blow up. But asterisks, I got
Asterisks.
business. Asterisks. If you are at the head of this company and your employees can see the stress get to you, it's contagious.
Oh, that's good.
And that can be a grenade in itself.
Ooh,
If they can see that you can't handle the stress, they will pick up on it.
that's good. That's good. That's a good point. That's a really good point. I had one guy, very nice guy, very like he's still a great guy and he's associated. But he asked me one day, after a few months of owning a profitable business, Josh, when does the stress go away? And I just started laughing. Like, what are you talking about? And he's like, well, my wife is getting upset because we'll go on vacation and I'll think about the business, or we'll be, out at the fire pit at night and I'll be thinking about the business, or I'll wake up in the shower and I'm thinking about the business. When does that go away? It never goes away. That's what you're signing up for. And people, this is what people don't realize. You have to give something to get something.
Mhm.
Everything has a cost, and they don't comprehend the cost that they've been giving so far in life, right? They'll go to work for whatever they do, fill in the blank, and they don't count the cost of, well, I'm missing this, I don't have enough money for this, I don't, but that's what you gave up. But
Right.
because you've been doing it for so long, you don't realize it. Now you become a business owner and you don't realize one of the things you give up is the ability to turn it off.
Mhm.
And every entrepreneur I know tries. I mean, there's tips and tricks and hints, and go to a float spa, go camping. But the reason you still need to do that is because you still can't turn it off.
Right.
And like you were saying, if you don't want to be that person, then find an alternative. And we can help people find alternatives. I don't want to sound all doomy and gloomy. I love buying businesses. I've been doing it forever. Um, and I think part of the problem too is when you hear from entrepreneurs, not just like myself, there's millions of them, but when you hear from entrepreneurs like myself or others who've been doing this for so long, there's a tendency for us not to recognize what a shock that new stress is. Like, I've been
Mhm.
an entrepreneur since I was 12. That is over 30 years. I've been a professional, adult entrepreneur now. This is my 30th year. So it's just part of who I am.
Right.
And sometimes we tend to forget, if I just drop somebody in my shoes, like, because when you buy a business, that's what's happening. You're not building it over the course of 10 years and getting acclimated. If you buy it on Tuesday, Wednesday, it's your stress ball, baby. So
Yeah.
to just drop somebody into that, I think we have a tendency as entrepreneurs to forget how intense that pressure really is.
Yeah.
So
Yeah.
very good, Malt. very good. Always like talking to you, Jonathan Malthouse, aka Malt. Anything else you want to add to this topic? Any changes coming?
Um, I can't think of. Well, there's discussion on raising the limit for SBA loans,
Okay.
specifically in manufacturing. It would likely only apply to current manufacturers. Um, but there have been bills submitted to Congress even in the past looking to raise the limit to 10 million instead of 5. Um, we could see that, not necessarily right away, but maybe if our failure rate stabilizes and goes
Yeah.
back in the next few years. Interest rates also, I think, would help if those came back down.
Yeah, I agree. And I think with the incentive to make America great again or whatever, and right or wrong, it's irrelevant. That's just what it is. With this push to get more manufacturing back, if we can get the SBA failure rate down, I think that would help manufacturing a
Wow.
lot. Well, very good, my friend. Always good to talk to you. And I think we're going to have you on again. And next time, I'll just tease it for listeners. Next time we have Jonathan Malthouse on, we will talk about another organization that issues or at least backs loans that so far the gurus haven't talked much about. So you'll definitely want to make sure you are here for that. That does it for this episode. Thank you so much for joining us. Make sure you like, follow, subscribe, share, follow, like, and subscribe. Do it twice, makes it twice as nice. Share with a friend, all that sort of stuff. Go to kingsbridgebrokers.com if you want our assistance in any of these issues. And I'll see you later.